Welcome back to Incomes.ca Q&A, and today we're talking with Garth Rustand, the founder and executive director of Investors Aid Co-op of Canada. And before the break, Garth was telling us that the Investors Aid Co-op is like the Lemonade book about cars, only it is for do-it-yourself investors. And you can find their website on the internet at www.investors-aid.coop. Garth, you were also telling us that the Investors Aid Co-op offers portfolio recommendations, which actually outperform 85 to 95% of the other financial products out there. That's a great example of how, like you say, educate your members about the best investment products. And you also show members how to reduce their investment costs as well as where to find the best advisory options. What else do you do?
We also post on the site. We post the industry discounts that aren't publicized. In other words, just about all costs in the investment industry are negotiable. There's just a couple that aren't, but there's about 18 other costs that are negotiable. And you can go if you switch your accounts around, if you go into if you're going to change products, you can generally make huge deals for yourself. So we
Can you,
post all those discounts on the site as well.
this is new information to me. I never knew that before.
Well, there are a couple of issues. The one difficult thing with investing is most costs are hidden. So when you're using a mutual fund, for example, that cost that they charge you to manage that, and the commissions are all hidden. You may know that there's a cost there, but it doesn't show up on your statement, and the advisor may tell you about it, but again, you don't see it. There's not a charge that you don't get a bill for the amount of money that you pay. So that's one issue. The other is that some of the costs are just we don't. It's funny, if we go to buy a car, we assume we're going to dicker and we're going to get a better price
Yeah,
because
you bet.
we're going to do the research to make sure. But when we go in, for some reason, we go into a bank or we go into an investment firm, and we don't think that. We think that the costs are fixed, that there's not much we can do about it.
Garth, I bet 99% of Canadians don't know that they can negotiate costs on their investments. Why is it that we haven't learned about this before?
Because that's the way the advisors want us to think. So we make sure that we're trying to make sure that consumers are better educated when they go and talk to their advisors.
Well, that's really great information. And let me just repeat what you just said for our listeners. When you're dealing with your financial advisor and you're investing your money, and let's say I'll call it buying an investment because it's no different than buying a car in the sense that you're handing over your money for someone for a product. And in this case, the product is an investment. So what you're saying is that you can dicker about the costs associated with buying that investment, just like you can dicker not on the price of well, you can dicker on the price of the car, but you're not dickering on the investment per se, but you're dickering on the cost of purchasing that investment, right? And you've posted a list of all the fees that you can negotiate with your advisor on your website, investorsaid.coop. Okay, go ahead, Garth.
Another really interesting thing that cost is not just cost. It's not just that. It's not just you're going to pay less and maybe you get fewer services. The lower the cost you pay, the better your returns are, and also the higher the quality of the investments you're going to get. And that's just, I won't go into all of it, but that's basically the way it is.
Yeah, that seems ironic. I mean, that's something that we can talk about in a future interview. But
Sure,
typically, so
sure.
what you're saying is often if you pay less, you're going to get a better product.
Yes,
Oh, wow,
you
that's
you
different than
you're going to get. Well,
it's
let's put it this way:
yeah.
the best investment products are the cheapest. To give you an example, if you were to buy an exchange-traded fund, which is a lot like a mutual fund, the annual cost is 0.17%. If you were to buy a mutual fund that tries to do the same thing, you could be paying as much as 2.5%, 2.8%.
Hmm.
So way more than 10 times as much. Plus, while the cheap one guarantees that you're going to hit the benchmark, the one you're paying more than 10 times for probably isn't going to beat its benchmark. So, and the quality of these stocks, the quality of the holdings in the low cost one are far better. And generally, so it's a bit of an odd situation where the lower your costs are, the better you're going to do, the higher your returns are going to be, and the better your better quality and less risk you have.
Wow. So, Garth, this sounds really good. And, before you had created Investors Aid Cooperative of Canada, had you seen another website like this or another cooperative out there in the world, or is this the first one?
This is the first one. I
Wow.
mean, this is the first one for consumers. There are like credit unions or co-ops as well.
Sure.
But
Okay.
they work pretty much like banks. But yeah, we're the only co-op for consumers, investment co-op for consumers.
And what type of investment knowledge does someone need to have in order to benefit from using the Investors Aid Cooperative? For example, what I mean is there are a group of people who think they don't know anything about investments, and let's call them beginners for lack of a better word. There's another group of people who, let's say they're in the middle because they have investment knowledge. They'll know what a mutual fund is, what an ETF is, and they might even manage their own investments through a self-directed RSP, for example. And then there's experts who that's investing is what they do on a daily basis, maybe their job, or not their job, but maybe they have the means to do it on a daily basis. But going back to the beginners again, Garth, do you have the Investors Aid Co-op website set up so that even beginners will benefit from it?
Yeah, we do. We post portfolios for beginners, so anybody can. One of the best places for beginning investors is to use what are called TDE funds. They're just very, very low cost index funds.
Sorry, Garth, what were those funds called?
It's TD. They're run by TD Bank.
Yeah.
And they are the lowest cost mutual funds in the country, and they have some very good products. What we've done is we've chosen the best products from that group of funds, put them in portfolios, and those are the ones that are there for beginners, or even for people who just want to. Mutual funds are an easy way to do it as long as it's cheap and you have the right ones. So we put portfolios there for beginners, or even people who just want to. A friend of mine, he's a prof over at UBC. That's what he uses because he just doesn't want the hassle of goofing around with stocks or whatever.
Right.
Now I have to say we don't follow stocks at all. Okay.
Okay.
And the reason is that it's too difficult for individuals to choose stocks and not get hurt.
Yes.
It's just we read about people who pick the right stocks, but when you go through track records of professionals, you find out that the track records are good during a rising market. They fall flat, and they rarely beat a simple benchmark.
Okay. Compared to a mutual fund portfolio or ETFs.
Yeah, exactly.
Okay, I understand that. Okay.
Trading is for most people is just too dangerous.
It's
When you
hard
get
to.
into it,
Yeah, sorry. It's the emotional part of it is a
yeah,
huge
the
part.
emotional part of it's very difficult. It may come down to, you go down and you look at your portfolio in the morning and you're in a good mood, so you'll buy some stock, and maybe the next morning you'll go down and you're in a bad mood and you'll sell some stocks. But there's really too much emotion in it. It can be too scary in a down market, and it can be too thrilling almost in a rising market.
Yeah, you bet. Yeah, been there.
So you just really have to take and the net effect is you're probably not going to outperform just a simple low cost vehicle that you really don't have to worry about.
Sure. Okay, we're going to take a break here, and when we come back, Garth is going to share with us more information about the Investors Aid Co-op of Canada website and the first thing that you need to know in order to take advantage of all the information it contains so you can immediately start investing your money smarter. We'll be right back.